Well, folks, there's something pretty big happening here in the next couple months that I think is very important that everybody pays attention to this and understands exactly how this works and why this is going to be an extremely good thing for investors in the stock market, because the last 2.5 years in the stock market has been a complete mess of a market to invest in. And I mean a complete mess of it. And we're going to talk about all this. I'm going to break all this down as simple as possible, what's going on here essentially, so every investor out there kind of understands what we've been going through and how abnormal this is and what we're about to go into. So hopefully you can have a better understanding of kind of what's coming next and how these things usually work versus like the freak situations that have been happening and those sorts of things. So I hope you guys get good value out of today's video. I think it's a very important video that I'm doing here today. And yeah, before we get into that, just so you guys know, there's a few hours left on the Become a Master of the Stock Market sale for $700 off there. And then that one is ending. So if you're watching this video tomorrow, unfortunately, the deal will already be over. But for folks that are going to take advantage of that deal here today, if you're newer to the market, start first with the fundamentals of stock market investing section first, and then work your way up from the top to the bottom. If you're a little more experienced in the market, just start exactly how we're going along here. Go through these 35 different lessons here that I'm teaching, and then the bonus part section is absolutely like jam-packed with value in there. How I value growth stocks, how to outperform the market, valuation studies. Like we go in depth on these videos, channel checks, how I value based upon different growth rates, moat, all those videos. So I hope you guys enjoy that. If you're able to take advantage of that before it ends, it's ending in a few hours from now. Okay. Alrighty, guys. So first off, the Nasdaq's down this year about 26.5%. Okay. Awful. I mean, just awful. That's a unbelievably, this is where it pays to understand kind of the history of the stock market and understand how freakish some of these moves are, okay? Now, never mind, that could get worse. We could end up, by the end of this year down 30% or down 40%, right? But nonetheless, even if the stock market was to close for the rest of the year, that would have been a historically awful year in the stock market, right? 26.5% down. And we can just pull up the history books and see how bad this really is, okay? If we look, right, this is over the past number of years. This is basically my entire investing career here, essentially, okay? We go back to 2018, it was a down year for the market, but 4% down, not 26, 27% down, okay? 2011 was down 1.8%, okay? Once again, not like a 7% number, okay? So anytime in recent history, this is an absolute disaster of a year. In most years, the Nasdaq should be green. In some years, it's going to be unbelievably green, right? And it's going to be, a very good return on investment. Now, somebody that's on the flip side could say, we were due for a massive downward year for the Nasdaq and for the indexes in general, right? We had been having a good time. We only, as far as the Nasdaq goes, we only had 2 red years in the last number of years here, and when they were red, they weren't like awful red. So we were due for a nasty year. Okay, that's what somebody says. Okay, that's fair. But I also want to rewind. I want to look a little further. I want to look a little deeper. What about years previous to this? Okay, well, in 2008. That was a year that was worse than this year. That was a year in which the Nasdaq finished down over 40 flipping flapjacking percent. Absolutely awful 2008 was in the stock market, okay? 2002, also a worse year for the Nasdaq than this year has been so far. Down 31.5% in 2002. 2000, also a worse year for the Nasdaq than this particular year. It was down 39% in 2000, okay? So there you have 3 years essentially there in which the Nasdaq did worse than essentially what's going on right now in this market, okay? What about prior to that? Well, if we go from 83 all the way through 95, we're going to see we had 4 red years. A down 3% year in 94, a down almost 18% year in 1990. 1987 was down about 5%. 1984 was down 11.3% for the Nasdaq, okay? So basically, what's the moral of the story when it comes to this part here, okay? To recap, we've only had 3 years in the past 40 years of the Nasdaq that were worse than what this year is as of right now, right? And once again, it could get even a little worse, we'll see, or better over the next few months, right? In those years were the 2008 financial crisis, 2000 and 2002 tech bubble mess, which was a whole situation where basically tech companies that had little to no business, let's just call it that, were trading at some unbelievable valuations. Then simultaneously, the bigger tech stocks were having trouble posting any sort of growth, so it created a very ugly situation. That's how you got the tech bubble to have 2 years that were worse than this particular year. Okay, so very, very ugly situation that was. And so it's important to understand that this is a freakish situation we're going through. This doesn't happen all that often. It does happen. It is part of the market. This will not be the last time you're in your investing career, especially if you're planning on investing for the next 10, 20, 30 years. This is not the last time you will see the NASDAQ go down 27% in a year. You will see that happen again in the future. It is something that does happen. It just happens very few and far between, okay? And that's what's the most important to understand about this. It happens very few and far between, okay? And remember, those were the end of the year numbers I just showed you there, okay? There was a lot of years where you had an immense amount of volatility, but by the time that year had ended, for instance, the market had come back very nicely. A good example of that was 2009, right? 2009 was a year in which, if we pull that back up, 2009, look at the market ended up having a great year for the NASDAQ, right? But at the beginning of 2009, the NASDAQ was a mess. Go back and look at the history books. It was a mess in 2009. At the beginning of the first few months, like the first 2 or 3 months, were messy, down, big. And then by the end of the year, it ended up eking out an incredibly nice gain, okay? So that can happen as well, okay? Now, just like a human, we can get very unhealthy. We're eating a bunch of snacks and cookies all the time, and we're not exercising or whatever, and we're just in unhealthy habits, okay? Just like we can get very unhealthy at a given moment, the stock market can get very unhealthy at a given moment, okay? And to be quite frank, the stock market over the past few years has been loaded up on chips and cookies, okay? It's been in an extremely unhealthy state for the past basically 2.5 to 3 years, roughly, okay? And here's what essentially happened, right? And this is not normal. This was a situation, this is when Rona came out, basically, right? And basically every single stock in the stock market crashed, collapsed, okay? Basically every single stock in the stock market got absolutely obliterated. Now, not healthy, not normal, but it happened, okay? Then we went through basically April of 2020 all the way through, basically the beginning part of 2021. We went through an incredible bull cycle. This is a Russell 2000 I pulled up here. An incredible bull cycle that basically you could have owned almost any stock in the entire stock market and you made money. And for a lot of stocks, you made a ridiculous amount of money. Insane, okay? Not healthy once again. If you're talking about a market that basically goes up in a straight line and the index basically doubles in a matter of, let's call it less than a year, not healthy. But that's what happened, okay? And now for the third showdown in this situation, basically starting in November of 2021 through today, it's basically been every stock in the stock market has basically gone down since November of 2021, and many stocks have gone down massively. We're talking 30, 40, 50, 60, 70, 80, some 90% drops in stocks. Also, not healthy. You're in a very unhealthy market when you're seeing things like this, okay? This is not a normal stock market. This is not how the stock market usually acts, okay? It's not usual when you have a crash down, a skyrocket up, and a crash down, okay? That's not a stock market acting as normal. You're going through a certain period of time where that is happening. And this does happen in the stock market from time to time, but it is very abnormal. It's very important for every investor to understand this, okay? And the reason this is so important is because as individual investors, right? As individual investors, what are the reasons we individually pick stocks? Why do we do this? There's a few reasons, right? Money. We want to try to outperform the market and make money, right? One of the biggest keys that is overlooked from individual investors is we like to try to control our own fate, okay? And we like to make our own moves and our own decisions out there and invest in what we want to invest in, right? And there's a very empowering feeling when you are taking your own money and investing it where you want to invest it, right? And pick the 5, 10, 15 stocks where you want to invest it. It's an incredible feeling. That's one of the feelings that still to this day, it drives me. And after the success and after the money and the homes and the cars and all those things, what still drives me is that feeling of power, and not just like putting in a savings account or just like, giving all my money to a financial advisor or giving all my money to, just an index fund or something like that. For some people, that's perfectly fine in respect to that. But there's a certain amount of us out there. We don't want to do that. We have no interest in doing that. We love the power of investing our money where we want to invest our money. But it's a very helpless feeling when you have the market crashing straight down, going straight up, and then crashing straight down. We start to feel like, we don't really control our own fate at all. We're just, basically, the only way we can make money, I guess, is by the stock market skyrocketing. And, even if our companies are doing good, if the market's all crashing and collapsing, we have no chance in that market, even if our company is executing their business model. And so we start to feel very helpless. And it hurts as an individual investor, especially when it's a long period of time that this has happened. We're talking about this has been going on for 2.5 years. Now, it's not like it's been just like 2 months. If it's like 2 months, everybody can get over that. When it's a 2.5 year span that you have to go through this, I call it like just tough mentally to have to go through that as an individual investor. Because as individual investors, we're looking at companies and we're thinking about where's this company revenues going over time, where's its margins going to go over time, where's its net income, what's going on with the business fundamentals over the coming years as an investor, right? Traders can think about something else, but as investors, that's what we think about. But when we see our stocks just crashing, regardless if the company's executing the way we thought we were going to do, it's a very helpless feeling. And then if our stocks are skyrocketing just because the market's going up, it's like, okay, cool, but we would have liked that to happen regardless, right? And so it's a very, very frustrating feeling. But what I can tell you is do not get discouraged by this sort of market. You're in a freakish market, and it will pass. I 100%, stand by that statement. It will pass. It is a freakish situation that sometimes you have to go through, and it's painful mentally, but it will pass, okay? As with any situation, it's always darkest before the dawn. And when you go through the VIX tells the whole story, which the VIX is a volatility index, which is basically going to show you how crazy the stock market is at a given moment, okay? And if we look at this all the way back from 2000, and this is a VIX I pulled up for the S&P 500, all the way back from 2000 all the way through, right now, currently, okay? There's basically been 3 time periods of, let's call it intense volatility, okay? And if we go back to the 2 periods previous where there was intense volatility, what do we see happens every single time? There's then an elongated period of calmness in the market, of chilling in the market, of the stock market acting normal, okay? So we go back to the 2000 through 2002 situation, extreme volatility in the market. Then that was followed up by many, many years from basically 2003 all the way through about 2008, right, of very nice, calm market. That was actually really, really good to invest in, right? Then we got the great financial crisis out of nowhere, right? And mortgages, and were just being forgotten about, and short sales and foreclosures and job losses, and banks are going under left and right. Oh my gosh, what a mess that was, okay? And we went through a period of a couple years of intense volatility from basically about 2008, 2009, late 08 is when it really started to get crazy. So late 08 all the way through about 2011, intense volatility in the market. And that was followed up by many, many, many years, like 8 years straight of just a pretty chill market. You had a little craziness here and there. Summer of 15, I remember that was a little wild. I remember December 2018, that was a little wild. But outside of those few time periods, it was actually a relatively chill market, right? And so now we've gone through another, let's call it extraordinary VIX situation. And so what do you think is going to happen in 2023 and beyond, right? Well, if I had to put my money somewhere, I'm going to say we're probably going to go through a pretty nice period of calmness in the market. That would be my guess, okay? Now, maybe this time's different, and maybe we just stay insane VIX for years and years to go in the future, and maybe we go through 10 years straight of, insane volatility in the market. I wouldn't bet on it. You can, that's fine. It's not a bet that usually pays off. You go through these time periods, they usually last 2 to 3 years, and then you get, 3 to 8 years potentially of a pretty calm market and a normal investing environment and an environment where it starts to come back to company fundamentals. Because when you're going through these, let's call it periods of insane volatility, it's no longer about what your company's doing. It's no longer about the revenues and those sorts of things when you're in that sort of market. Everybody's just paying attention to the macroeconomics. They're paying attention to geopolitical events and all those sorts of things. And that's what drives the whole stock market when you're in those time periods of insane volatility. When you're in these time periods, the story goes back to, okay, what's going on with this company's revenues? What's going on with their bottom line? What's going on with their cash flows, and all those things start to matter again, okay? And so we will get back there, and it's going to happen sooner rather than later. Now, what's the risk out there for us, okay? There's kind of two main risks in my opinion. This is the biggest one, China-Taiwan. Absolutely a real risk and a massive risk. If something was to happen there, guess what? VIX is going to go crazy, and we'll have another, 6 to 12 months of insane volatility in the market. If that was to happen and get nasty. Obviously, a lot of our tech companies have a lot of chips that are made in Taiwan. It's very important. And, a lot of people are looking at that as what would happen in that sort of situation. And for the stock market, from the U.S. side, they actually look at this as a bigger risk than actually the Russia-Ukraine situation. Russia-Ukraine, a little bigger for Europe, I think, than maybe potentially this. But for the U.S. stock market and for U.S. companies, this is actually a bigger deal. And so that's a risk. We'll see what happens there. But there's no doubt if things were to get really ugly there's no doubt we would go through another period of insane volatility, which would basically put us into 3 years plus of insane volatility. And you very rarely get that, but you never know. That's a absolute real risk out there in the market, okay? The other, I would call it smaller risks to the market, is large cap stocks. Now, the good news for large cap stocks is they've gotten much more in line with kind of where they should be, to be quite frank. But there's no doubt that there could be a little more pain for large caps ahead, okay? And put us more into, let's call it a 14 to 15 range for forward Ps. This is from Yardini Research, by the way. Put us into maybe 14 to 15 range, something in there. Then you start to feel really, really comfortable. I feel much more comfortable in the market now than before. And the reason being is now we're at least in realistic ranges versus before we were in, let's call it insane ranges, right? When we were up here, you knew the indexes had to come down. That's just bottom line. You knew we had to fall because we're just trading too high. Like, you're not going to trade up there forever and ever. That's unrealistic. Like, usually large caps are going to trade. If you just pull up this chart, historically, they're going to trade it anywhere between about 12 to about, 16, 17. And so the more you get above, let's call it a 16, 17, the more likely you're going to come down in the market, right? If you start trading at 19, at 20, at 21, at 22, it's just it's a ticking time bomb situation. It's just tick, 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 and sooner or later we're going to come down, right? You know what else is tick, tick, tick? And this is why I'm investing so heavily in these stocks the last few months and plan to continue to, is smalls and mids. This is a tick, tick, tick situation, but on the upside. They will not stay down here forever. This is unsustainable, as large caps trading at a 22 plus forward P was unsustainable. These stocks trading at 11 and a 12 forward Ps, this is unsustainable, and they will go through let's just call it a major rise. And the thing that's interesting about these stocks is these could go on an epic run, let's say in 23, for instance, and if those stocks went on an epic run, it doesn't mean the indexes necessarily have to go up a ton or large caps go up a ton, because these don't move the market, okay? Let's be quite clear. These stocks don't move the market. The biggest of the big dog companies have gotten so big now that they basically can make the whole market, as far as the indexes go up or down or look good or not, right? Because Apple, Google, Microsoft, Amazon, Meta, Nvidia, all those sorts of companies have gotten so large, Tesla, that they drive the indexes. But these babies could skyrocket. It doesn't mean necessarily the indexes would skyrocket. And I think that's important to remember. And this is why I've been investing so heavily in these type of stocks. It's unrealistic. They're not going to stay down there forever and ever. That's just not the way it works. And sooner or later, they'll come back into their normal ranges and they will rise quite rapidly. They've just got to get hit with, the wall of worry. Let's call it that. Okay. So for all investors out there, keep your head up, okay? As Mr. Pock said, keep your head up. This shall pass, as with all things in the market. And, we'll get into a normalized environment. And wherever your company fundamentals are going, that will matter again. And we'll be out of this whole macro mess of, oh my gosh, oil's spiking, so the whole market has to tank. And oh my gosh, this happens, so the whole market has to tank. Or, oh, now we can skyrocket to the moon. And I'm looking very forward to it as an individual investor. So, hope you guys enjoyed this video. As always, I appreciate you joining me. Once again, there's only a few hours left on the Become a Master stock market sale. If you want to take advantage of that before it ends, that will be pinned. Comment down there. Much love and have a great day.